Speaking of deficits, given the boom in commodity prices, why are we still seeing budget deficits over the last 5 years?
Yeah, I think it's a contradiction of a sort here, I suppose, because we are obviously a net exporter of commodities like crude oil, gas, palm oil, rubber, you name it. But at the same time, we have this blanket and extensive subsidy system. So to me, commodity price boom is a double-edged sword really. It gives us a lot of money in terms of export earnings, but a large chunk of that in a way has been redirected towards higher subsidies when commodity price go up, because of the price subsidies in place that is quite extensive. You have fuel price cap, you have gas price cap, and then you have subsidies for essential food items, education, health, and so on, to keep the prices and the cost of these goods and services that are essentially controlled by the government in terms of pricing affordable and available for the masses. Then the subsidies bill consequently go up as well. So it's really a case of the commodity price boom being more of a double-edged sword for Malaysia.
Anthony?
Yeah, I think misdirected funds is one of the causes of the fact that we're still running budget deficits, and pump priming and the government getting too involved in things that the private sector should be doing is something that tends to lead to wastage of money. I think the current administration understand that, and there is a genuine effort to try and get government-linked companies that are involved in one industry not sort of straying into other industries, which is good. I'm saying this as somebody who was born in the UK, and over the past 30 years the UK has completely frittered away every drop of oil that they had in the North Sea, so they've done exactly the same thing. So it's not easy to do.
Now I'd like to touch on the services sector, since you're talking about the private sector as well. Why is our services sector stuck at 60% of GDP? Are we, or is the economy, in this sort of middle income trap? And what is a middle income trap anyway?
Well, to be fair, I think the contribution of services sector to the economy has actually increased over time. I mean, from lowly 40% in the 70s and 80s as a percentage of GDP. I think in the 90s it's started to creep up towards slightly above 50% by the end of that decade. And in the current decade, it has essentially edged up further to around maybe 57–58% of GDP. So there is that progress. And in fact, in the current decade, services sector growth has actually outpaced manufacturing sector growth. It has never done that before, between 1970s all the way up to the 1990s. I guess to some extent the reason why it looks as if it's kind of stuck or heads seem to be bumped at some sort of a glass ceiling or something, I think to some extent is because there are some restrictions about foreign investment in the services sector previously, and to some extent that has largely been addressed by the government. I mean, back in April, the government announced this liberalization of non-financial services sectors and further opening of the financial services sector. So over the medium to long term, provided that we undertake all sorts of other reform, restructurings, and market ourselves well to the foreign investors, I think we should see further improvement or further increase in the contribution of services to the economy in terms of its share to GDP as well as in terms of its growth. Because essentially that is being targeted now as the new source of growth for the Malaysian economy as we sought to move into this high income economy by 2020. And speaking about this middle income trap, I think the issue here is the worry that we will fall into that category of country that stuck at that middle income category despite all the efforts over the last 20 years to industrialize and so on. I mean, if you look at Malaysia's GDP per capita right now of about $8,000, it's within what I call high middle income country, because as per the World Bank's definition of what constitutes high income country right now is a per capita income of about $11,500. So we are not that far off number-wise. But the thing about this definition or this sort of threshold line is a moving target. And according to World Bank as well, by 2020, the high income minimum level of per capita income of a country to qualify it as high income economy would be $15,000. So where we are now and $50,000 in 10 years time looks like half of that, and if we are unable to grow at certain rate of growth over the next decade, then there is a risk that we will fall into that middle income trap. And I think recently, probably yesterday or even very recently, I think the Prime Minister has said that we need to grow around 8% per annum over the next decade to achieve that minimum level of per capita income and qualify ourselves as a high income country. And I think this number basically poses a lot of challenges in terms of Malaysia going forward, because if you look from historical context as well, it would be interesting just for food for thought. If you look at Malaysia and South Korea, I think it's a fair comparison because we basically start off at around the same level in terms of development and in terms of our industrialization path. Back in 1950, I think our per capita income was something like $1,700. Korea was about half of us, about $900. By 1970, Korea was catching up. We were about $3,200 per capita income. Korea was about $2,800. I think last year we are about $8,000, and Korea is already almost $20,000. So I think the fear about this middle income trap is that historically also we have seen a situation where there are countries that perhaps started behind us, but in the race they have already overtaken us. And
isn't there a score sheet from 1972? Malaysia 6, Korea 0 at soccer. That's rather changed.
That's another issue. You can also use the football analogy to show how different things have been with regards to the two countries.
Yes.
But gentlemen, do you find this trend worrying?
No, I think that we're ahead of Thailand and Indonesia, who have a contribution from the service sector of between 35 and 45%. But we're quite a long way behind someone like Hong Kong, that's nearer 90%. And in order to grow at the 8% that Suhaimi was talking about, I think you have to move into a higher income bracket. And I think Malaysia and a lot of other countries in Southeast Asia, the gap between the rich and the poor is too great. In particular in Malaysia, the gap between the rich and the middle class. You know, people who do jobs that require a degree, or people who have got degrees and commute into work, their income is not very high.
Like analysts.
Sorry?
Like analysts.
Like analysts. I was talking about the futility of forecasting. But I think that it's people like this who have got the education that need to get a higher income to make use of the services that might be offered to them. In order to get a higher income, I think, as Suhaimi says, you have to get rid of this sort of subsidy culture, and that is happening. I think in the terms of oil prices, prices at the supermarket, etc. Liberalisation is starting to bring all these commodities prices to world prices. So this move to remove subsidies doesn't happen like that, but it is happening.